Okay, so if you've been following INEOS like I have, you probably saw the headlines about layoffs a few weeks back and thought, uh-oh, is this the beginning of the end for Grenadier? Well, I've been digging into what's actually happening over there, and honestly, the picture that's emerging is a lot more nuanced than those initial headlines suggested. Hi, it's Josh, and today we're going to talk about what INEOS is actually telling us about their business, because here's the thing, they're a private company, so we only know what they choose to share. But what they're sharing paints a pretty interesting picture about a company that, well, let me just say it's not what I expected. So let's start with what we know. Yes, INEOS did announce layoffs. Several hundred head office staff across multiple locations. Now, when I first reported on this, it definitely raised some eyebrows. But here's what's interesting about how they're framing it. According to their press release, this isn't about the company struggling. It's about them transitioning from what they call an engineering phase into a market-focused automotive business. Basically, they're saying that they've built the car, now they need to sell the car. And that requires a different skill set and organizational structure. They're specifically targeting head office positions while focusing resources on what they call frontline operations, manufacturing and commercial activities. Now, I don't know if this is just corporate speak or if there's real strategy behind it, but the timing is interesting when you look at what else they've been announcing. Because here's where it gets interesting. I recently read an exclusive interview that Autoblog did with Gregor Hembro. He's the Executive VP of the Americas region for INEOS. And the numbers he shared, well, they're actually pretty compelling. In just 2 years in the Americas market, INEOS has put out 11,500 Grenadiers onto the roads. Now, it might not sound like huge compared to Ford or Toyota, but here's the kicker. Hembro points out that this is all retail sales. Not fleet sales, no rental car companies padding the numbers, just people walking into dealerships and buying Grenadiers. Apparently, about 60% of INEOS's global sales are coming from the US market. We've heard that a lot. The Americas region is basically carrying this company right now. Remember that there are 49 other markets around the world. Hembro says that they're 32% up year over year in October, and their orders are up 44% compared to last year. Now, we have to take these numbers with a grain of salt because, again, private company, we only know what they tell us, but these numbers, if they're accurate, suggest that layoffs aren't about a failing business. They're about doubling down on what's working. What I found really interesting is who's actually buying these things. Hembro says that the average household income is $150,000 and the average age is 50. To put that in perspective, BMW buyers average around $175,000 household income. So we're talking about a similar demographic with perhaps a slightly lower income bracket, or maybe it's one of those none of your business when it comes to reporting one's income. But here's what caught my attention, the trade-ins they're seeing. Hembro mentions that they've taken about a half a dozen Cybertrucks, some Rivians, and even a Ferrari F40. A Ferrari F40? That tells you something about the kind of enthusiasts that this truck is attracting. Most trade-ins are coming from Land Rover Defenders, Jeep Wranglers, and Ford Broncos, and that makes total sense. These are people who want the capability but maybe want something a little more, authentic, different. And apparently, some customers are so passionate about these trucks that some are trading them in early just to get new colors or wheel options, he says. That's not the behavior of people buying a truck they're lukewarm about. And I'll note here that I do have more than a few viewers who own more than one Grenadier. Now here's where INEOS is really putting their money where their mouth is. They just opened a brand new Americas headquarters in Montvale, New Jersey. Not a small regional office. We're talking about a full headquarters with corporate offices, meeting spaces, event areas, and a brand experience center. That's not the move of a company that's struggling or planning to exit the market. This is a company that's betting big on Americas being their primary growth engine. The timing is interesting too, because they're opening this facility right after announcing the layoffs. So they're cutting their head office staff globally while simultaneously investing in major new facilities in their strongest market. And that suggests that they're not just cutting costs randomly, they're reallocating resources to where they are seeing success. Hembro also dropped some hints about what's coming. They're apparently pulling forward the mid-life cycle refresh for 2026, which is pretty aggressive timing for a truck that's only been on sale for 3 years, because most automakers wait longer than that. He says they've been listening to customer feedback about things like road noise and handling characteristics. Now, I don't know if these are major changes or just refinements, but the fact that they're responding this quickly suggests that they're really focused on customer satisfaction. In the longer term, Hembro mentions aspirations for a smaller vehicle and maybe a 7-passenger option. Plus, electrification is still on their radar, though he frames it as brand extensions rather than replacements for the core Grenadier. Look, here's what we need to remember. INEOS is still essentially a startup in the automotive world. They've been selling cars for 2 years. The fact that they've moved 11,500 units in the Americas alone, built a passionate customer base, and are investing in major new facilities, that's actually pretty impressive for a brand that didn't exist a few years ago. But we also have to acknowledge what we don't know, that these are numbers in the story that INEOS wants us to hear. As a private company, they don't have to disclose detailed financials. And we don't know the profit margins. We don't know global sales figures. We don't know how much they're spending on this expansion. So what's my take? The layoffs initially looked concerning, might actually be part of a strategic pivot towards their strongest market. The Americas region seems to be performing well above expectations, and INEOS is responding by doubling down on that success. Is this a guarantee that INEOS will be around for the long haul? I mean, no. The automotive industry is brutal and plenty of well-funded startups have failed. But the picture that's emerging from these recent announcements is of a company that's found its footing in at least one major market and is restructuring to capitalize on that success. What do you think? Are you seeing the Grenadiers and Quartermasters in your area? Have you had a chance to drive one? Let me know in the comments. I'm curious if what INEOS is reporting matches what you're seeing on the ground. And if you found this breakdown helpful, hit that subscribe button. I'll keep tracking what's happening with INEOS and other automotive startups as the industry continues to evolve. So thanks for watching, and I'll see you in the next video.